It is getting critically important to take a look at the charts and see what could be coming our way in light of what we got yesterday between the jolts and what we saw for IM services in terms of prices. So what we got that kind of ripped apart the market was a pretty inflationary thing from ISM services coming in, that the prices are advancing more than expected. So for that one, that's not great for signaling higher inflation, which if we think in terms of for the federal funds rate, that means that it reinforces fewer cuts or even means fewer cuts, and maybe even gives the price, the scare of a federal funds rate increase from where we're at, and something that would make that a little bit easier in order to occur, or in order to happen, would be if that JOLTS report is accurate and showing that we actually had stronger than expected job openings, higher demand for employment, which would mean tighter labor market conditions. So if we have tighter labor market conditions, the Fed doesn't have to be as aggressive at cutting the federal funds rate, which the market's been waiting for, so the market has ripped down. So with the higher inflation side of things, if the government wants to keep things crimped down a little bit and keep tighter monetary policy, well, then they can just hold out their federal funds rate higher for longer, or even they could even go back to an increasing type scenario, in which case you see things like the stock market fall, but then you also see the bond yield fall, and so that takes popular things such as the TMF or TLT, however you want to talk about it, the U.S. 10-year Treasury as well. TLT being the U.S. ETF for the U.S. 20-year Treasury, and then TMF is the triple leverage version of that. Well, then they decline pretty rapidly in the face of higher inflation and also the higher federal funds rate as far as that would contribute to it. And so that's kind of why you see both the stock market and the bond market fall in that sort of scenario, at least in the near term. Now, I will say tighter labor market conditions are a good thing that could stave off things such as the recession that has been talked about. So we'll see if it's something that holds out or if this is just a temporary blip followed by whatever comes next. So we're going to have to watch and see. I do think that that when President Trump comes in, that wherever we happen to find bottom on this thing, maybe we just saw a quick little rip down and then it stabilizes. We still have non-farm payrolls coming up on Friday with the unemployment rate also on Friday of this week, CPI and PPI for inflation next week on top of big bank earnings coming out. I think that this could still be a rather temporary drawdown, but we do want to take a look at the moving averages, because they are really important when we look at the charts for indicating what could happen from where we're at and where we need to get back to in order to have a strong recovery. We also want to look for possible bounce zones. So with that said, we're going to look at the S&P 500 through SPY, QQQ for the NASDAQ 100, IWM for the Russell 2000 stocks. I also want to bring up Bitcoin as the big dog in the porch for crypto and where that's sitting right now, and then also XRP I've been covering, so I'm going to keep on covering that and give that update as well. So let's bring this up here for SPY, and what do we see? Well, we see a decently large red candle, not as big as the one that we saw back on December the 18th. By the way, if you hear a cat meowing, that's Benny. Say hello to him in the comments of this video. He's just a noisy guy. What do you say? He might even see him jump up on my lap at some point. But fast forwarding to today, or I should say yesterday, for January the 7th, for SPY, we almost have that death cross of the 20 and the 50, being back down below the 50 after that short blip up above it. That could lead to a further rip down from where we're at, especially if we lose support. About 586 seems to be one area where we find support. As a matter of fact, let me put my technicals up here, and you can see where we had to hold right at about that 586, and down below that, keep on getting buying pressure on 581. If we lose 581, that's where we can start to see a further sell, 574-ish, down to about 566. Notice there's a Fibonacci extension value down here near the 200-day. That would be in the 560s. If we do come in contact with the 200-day over this would be an area. Now, mind you, I think it would take those other reports. I think it would take bank earnings, and we'd have to have things get a little bit darker for a little bit of time. If we come in contact with that 200-day, expect a significant bounce right around there. If not, we got to keep these lines, these horizontal lines as support. Let me get rid of some of these drawings on here. That's from a different conversation from the rising wedge pattern that we happen to find ourselves in. Now, mind you, that's also noteworthy for SPY. Let me get those things off the screen for you. So if we lose these supports, that also puts us outside this rising wedge pattern that we happen to be in right now. And if we fall down through that retest and then we get rejected off of that, that could signal a further sell. We absolutely want to stay inside that rising wedge for a time longer in order to see further upside. So inside the rising wedge, and then also as far as the moving averages go, got to get back on top that 50. A rejection off the 50 as resistance, especially with the 20-day right there, could lead to a more significant sell. So we want to be watchful for what happens around these moving averages, especially as they cross each other. So we could get a bit of a head fake where we drop down significantly this morning and then get a big push back up. But watch the 50, watch the 20 simple moving averages. They're going to be very telling from where we're at right now to what to look forward to from here. Now, mind you, if I put up Bollinger Bands just real quickly, these are the 2 standard deviation Bollinger Bands, so a very standard deviation for the Bollinger Bands. 3 can be even more telling. So as we look at this, we just lost that 20-day yesterday, but we're not to unusually low prices. Watch for that, because that, as you see us go outside of those unusual prices, then we can have a reversion back to the mean. So let's keep moving from here. QQQ, watch that we keep the 50-day. If we lose it and get rejected off the 50-day, watch the 200 right around 476. If we keep it, then we really definitely have to get back up on top of the 20-day, because that is starting to converge on the 50-day. Another rejection off the 20-day, once again, could send us back down to the 50. Then they got to fight each other again, go back to the battlefield, and find out where to go from there. Let's move on to IWM. I almost said ISM. I'm still thinking of the services data from yesterday. IWM, tracking the Russell 2000 stocks. We dropped below the 50 going back on the 18th of December, and then we haven't gotten back there yet. We got rejected twice so far off the 20-day pre-market hours. We're still down below that. Watch for that buying pressure. This could be something where we see a little bit of additional pain. Now, I talked before about the cup and handle pattern, that so far we have the cup, but we don't have a handle. So right now it is just a dream. There's the cup. Watch and see if we get that handle where we actually start to come down towards that 200 week that we have, or the 50 week. If we get down near the 200 week, the simple moving average for it, and that puts us right around $200 per share for IWM for the Russell 2000 stocks. So if we get down that low, watch for that moment where we start to break back up again, and we're going to have to draw some trend lines for that handle. Breaking up above that handle is wildly bullish, and then that could put us up closer to the mid to high 200 range for IWM. It could lead to some outperformance once whatever selling in we are happens to go away. Now, for right now, we just need to watch the moving averages. The 20 week is going to be huge for us. Going back to the daily, really need to get back up on top of the 20-day. That would be a first positive step forward from where we're at right now. And if we put up the EMAs for a moment and take down the SMAs, what do we see? This green 5, which is the fastest moving average I have on here right now, need to get on top of that. Right now we're dangling off of it. That's bearish. Getting on top is bullish. Then we want to cross this yellow 13. Getting on top of that is even more bullish, and getting the 5 and the 13 to cross, or the 13 to cross the 50 EMA, which is in red, that's even more bullish from where we're at right now. So far, we're okay. We're not necessarily in bad shape, because we're still in bullish territory up above the 200-day, up above the 200-week. We do have some temporary concerns that we want to be watchful for. There's additional pressure put on Friday based on what we saw yesterday. So please keep that in mind. Plus FOMC minutes today at 2 p.m. They'll be released. So Bitcoin back below the 50 and the 200. We have an engulfing candle, likely indicating a further sell. Watch this trend line, this bold white line that you see coming across here. Breaking that is highly bearish. That could lead us down to 85,000, 78,000, 71 to 73,000. So just be on the lookout for that. As a matter of fact, the technicals would indicate a drop to about 77 or 78,000 off of a pretty decent looking head and shoulders pattern that we have right here, with that neckline being a very critical neckline off of the previous peaks that you see back in here as well. So for Bitcoin, I would say this is the critical line to watch. This trend line that I have on here for you based off those peaks. You can see how good of support it's been. 1, nearly 2, 3, 4 touches. The only thing saving this from being a touch off of this was that 50-day coming up, which now we're back down below 50, 20. And if we put up the EMAs on this and take down the SMAs, we're getting that cross between the 5 and the 13. Watch the 50 EMA, because right now that's where we found that support so far. If that breaks, then it's the neckline. Down below the neckline, that can be a significant sell from there. So those early indicators on Bitcoin, bouncing off of those, getting back up above the moving averages, that's where your bullishness comes back. That's what you want to watch for. XRP still sitting on its 20-day. Man, this thing does not want to give up from where it's at right now. It's chomping at the bit. 1 week from today is when we have that expiration date, or that deadline for the SEC to file its appeal in their court case with Ripple. So we want to be watchful for that with XRP. If that is something that comes and goes and there's no event, you can find more bullishness coming in because that's one weight lifted off its shoulders. But we also want to watch the overall markets, watch the risk assets, watch Bitcoin to see further indication of where we're at. We're above the 50 and the 200, above the 20, still in bullish territory for XRP. I want to see that break out to $3 to $4 per share. I mean, my goodness, per share, per XRP token. That is going to be significant, but we do have to get up above this first. A nice retest would be excellent for that confirmation. Find out that we have this now as support, and then our rocket ship can take place from there. Falling down below this is a bearish thing because that takes all that bullish momentum that we have and kind of goes contrarian and reverses it. So watch for falling down through support instead off this bottom trend line. That's also going to be huge. Guys, I'm going to wrap things up for right now. If you want to hear more of what I have to say, see my buys and sells, see my technicals, talk to me and my community members, there's links in the description for Patreon. Click that, sign up, and head on over to the Discord. That's where you'll find everything. And then, guys, also, there's a link for Stockmo Academy. Check that out for technical analysis. You're going to find everything that I do here over there as well. I vetted it as an educational professional, 17 years, earned doctorate in education. I can tell you that it's a top-notch course. And also, as a trader in the stock market, I can tell you the bread recipe trading strategy you get with that as well is also equally top-notch, and you'll be very glad that you signed up. Get that information. Bread recipe, super easy to set up, super simple, straightforward, and very powerful when it comes to providing results in your portfolio. Tons of testimonials coming out, people paying for the course in as little as one trade, and you can get that course cheaper by using the code word DOCTOR, DOCTOR. The link is in the description for Stockmo Academy. Go ahead and check that out. Guys, thank you for watching. I do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.